Good day, guys. Welcome to Forex Walker. Welcome to episode 70. Now, on the previous episodes, I had a Euro Turkish Lira trade where I was talking about how to trade the tourist arrivals in Turkey and the euro not being trusted by myself. It was supposed to be bearish, but instead it started moving sideways instead. So the bullish moves were really powerful because the Turkish lira is the weaker currency compared to the two. So the trades that were traded were, let me try to show them to you, were this part was traded. You can either trade it from up here all the way down, or you can wait for this pullback and sell it. And the second trade that was taken was here. And when we had this break above, I expected this break to manipulate this blue line here and reject it a little bit and drop all the way down, but it did not reject it the way I expected. It actually pulled all the way up there where I had to give up on this whole trade. But either way, the trade ended up uh, selling. Well, I knew it was to sell, but I was not satisfied with the the pullback that went all the way up there. So I had to give up on the trade. The trade was supposed to have landed on this trend line and manipulated it like that, but it didn't even touch it. It just reversed all the way. So from my side, the Euro Turkish Lira is over. It's done. So we are no longer going to talk about the Euro Turkish Lira. uh, the reason being, yes, we are still going to have some bearish moves on the euro, but I don't trust the euro either way. And we are still going to have some bullish moves on the Turkish lira, but because the Turkish lira is giving us a pullback from the bullish moves that it had, the next trades are not going to be within this daily channel here. They're no longer going to be within this red lines, these channels here. They're going to be somewhere else. So for that, am quitting this trade. In fact, I quitted this trades on the last sells, and I couldn't sell this because of the pullback that went all the way up there. So the Turkish lira trades are out. They are over. We'll look for something else, guys. One of the biggest trades for day traders is the pound USD. The pound USD was observed by myself for a long time, but the issue is the spread. I I'm not a day trader, but day traders can actually make a lot of money out of this one. So this was the first touch, the second touch, the third touch manipulates and it drops. That's the price action part. I'm not good with that. So this would be the spring and the test for Wyckoff traders and the sell. So here you can see that we went to the peak and we went to the 50% feed here, and we rejected to the test and the market dropped. That's the price action part. The only issue that I have is that I'm not a day trader, and the spread in this trade is not that good, is a negative carry. So I wouldn't be holding this unless if I was uh, uh, unless if I had some negative some losses somewhere where I had to recover. So I would only take a negative carry if I took some losses in the previous time. So this is one of those trades, but I would rather go for something else like the NZD USD, where we had a peak on the 1st of July 2025 where it sold all the way down there. This sell will continue into the first quarter. So I don't know where the pullbacks will be, but uh, when I was starting my trading journey, I had to learn the hard way. I would study the performance of a currency, and I would wait for pullbacks, and the market would not give me any pullbacks, and I would just observe a trade that I did a research on, where I had to learn my lesson. These days, I don't look for pullbacks. I trade with dual moves. So in those dual moves, what I do is that I sell from here. I just look at the rejections and I sell from here. And what with two positions, one large position and the second smaller position. So I'll sell it and wait for a rejection to the upside while we return to the previous shoulder. So I'll take profit with my larger position here and leave the smaller position to revert into the previous shoulder, and I would wait for rejection. Then I would supply another larger position. That's how I had to learn the hard way in trading long-term trades, because sometimes you don't really see any form of pullbacks. Here we had a decent pullback from the 50% fib to the previous shoulder here, and the market rejected all the way. But most of the time, okay, this is the NZD and AUD trades. Once you see AUD USD or NZD USD, you actually get those beautiful pullbacks. But sometimes with the JPY trades, you don't really see any pullbacks. But recently, with the CHF being correlated to the euro, it is no longer acting as a safe haven, it's acting as a powerful currency. So what you see on the Euro USD is what you see on the USD CHF. The pullbacks are really beautiful, and you can actually hold those trades. So this NZD USD, one of the high yielding uh, currencies that we are going to be selling in the fourth quarter. The second high yielding currency is the USD CAD. That will be continuing. I'm not expecting any form of pullbacks in here because of the huge economic divergence between the two currencies. So what I was talking about in when I was talking about pullbacks, if you look into the lower time frame, you can see that here you had three drives to the top. This third touch supposedly was supposed to be rejecting, and this being a 50% fee. So you can rather take the pullbacks from here and forget it because of the economic divergence. I'm not expecting anything to reject from the 50% fee and go down there. I'm not expecting that. This trade is gone. It won't be coming back anytime soon. So those are my expectations in this USD CAD, and the journey is much longer than you can see. We're going to be looking into next year in Feb, perhaps, where we might be taking profit. This trade can also be traded with the USD CHF. The CHF not being a high yielding, but it has the lowest interest rates, and the hedge funds are going to be jumping into the CHF, uh, uh, throwing away the JPY because of the central bank issues. But from my side, I believe the JPY will sell much longer than the CHF, but the CHF will be selling as well. So the reason being, they're not looking into interest rate cuts, but the CHF will sell more because the interest rates are at zero, and the economy is really not performing. The inflation is actually collapsing to the lowest levels, and the central bank is forced to actually uh, actually conduct interest rates into the negatives, and that is one of the reasons why you see a currency selling for a long time. So the CHF will be selling for a long time. The JPY is, if it was a stock, I would say they're going into mergers and acquisitions, but the they're still looking into the central bank to see what the JPY will be doing. I believe the JPY will be selling for a long time, but this term I won't be selling the JPY. The AUD is also a high yielding trade that will be taking off to the upside, but the most highest yielding between AUD and is the AUD CAD. That is the highest yielding. This is just the CHF that I'll be looking to holding with the AUD, but the highest yielding is the AUD CAD for the term that we're looking into. But the CAD is actually having a lot of bullish moves, so the trade will not flow as much as we're looking forward to. So this trade will be taking over. If you are looking for pullbacks, I don't think you're going to be seeing any form of pullbacks. This trade is gone. You will be holding this trade all the way to uh, this weekly time frame trend line or even above it for the manipulation of the level. That's the AUD CAD. I'm not in the trade just yet, but I believe that the AUD CAD, I think I'll enter this market when the time comes, but I'm not expecting any form of pullbacks at the moment. I'm looking at it, I'm just observing it, but this is one of the highest yielding currencies. Those who trade the RSI will tell you that the RSI does not allow them to buy a currency at a highest level. But if you have fundamentals like context in macroeconomics, and of course the central bank reports, you can actually hold it from here and buy it. That's why I like fundamental analysis. It can tell you to buy high and you can still buy a currency because you know that uh, in macroeconomics allows the trade to go there. But the RSI will tell you that here you're overbought. You need to wait for a pullback, and guess what? The pullback never comes. The market proceeds to move all the way up there. So that's macroeconomics working for you and the RSI working against you. This is the Euro AUD, most beautiful trade that I've been looking at for the longest time. The Euro USD here. Here it shows you that it landed here somewhere and it manipulated. I don't think it did manipulate. But from this trend line here, this daily time frame trend line, it shows you that the first manipulation was here, the second manipulation was there. So, but on this line here, it does not show any form of manipulations on the third touch. So that being fine. Uh, so we're actually looking at this trend line, this line that I've drawn a long time ago. I'm not really expecting it to reject all the way up here or up there. It might turn around anywhere around this level. Even if it manipulates the first touch, second touch, and it manipulates the third touch here, I would be fine with it and I'll be able to sell my favorite trade, the Euro AUD. However, if we get interest rate cuts anytime soon in Australia, we might the trade might fall into a negative carry. Those are the worrisome reasons that I have on this trade. That's your favorite Euro USD. I have reason to believe that this trade is gone. Yeah, my expectations is that we might hit below the 50% fib reverse and drop, but that's not really important. Thank you guys.